All right, let's talk Hershey's. We're diving into their latest earnings report, and believe me, it's a story with a real twist. Think sweet, sweet success, but with a kind of bitter aftertaste.
So, on the surface, everything looks amazing. I mean, they're selling more of their famous treats than ever. But, and this is a big but, once you peel back the wrapper, you'll see a much more complicated story playing out for this chocolate giant.
Okay, so here's how we're going to break this down. First, we'll look at that awesome sales victory. Then, we'll get right into the big mystery, that profit paradox. We'll figure out what's really driving the growth, tackle the high cost of making our favorite comfort foods, and then see what Hershey's plan is to fight back. And finally, we'll look at what this all means for the road ahead.
All right, first things first. Let's talk about that headline number, the one that blew past everyone's expectations.
Check this out. Hershey's total net sales shot up by 6.5% in the third quarter. In the current economy, that kind of growth isn't just good, it's a huge win for them. No question about it. But, and here's where it gets interesting, this is the central puzzle we're trying to solve here. You'd think selling more stuff means making more money, right? I mean, that's how it's supposed to work. Well, not this time.
So that's the big question, isn't it? It's exactly why analysts and investors are suddenly paying very close attention to every little thing the company says.
Yeah, despite selling more of everything, chocolate, popcorn, you name it, Hershey's net income didn't just take a little dip, it plunged by a staggering 38.2%. I mean, wow, that's a massive drop that just doesn't seem to make sense next to those great sales numbers.
Okay, so if the profits aren't coming from selling more stuff, then where in the world is all that extra sales growth actually coming from? Let's dig in and find out.
Now, have a look at this. This is really interesting. The North American salty snacks part of their business grew by a whopping 10%. To put that in perspective, that's almost double the growth of their classic chocolate and candy business. It just goes to show you, their big bet on salty snacks, it is absolutely paying off.
And this growth is coming from all over the place. Their snack brands are just on fire. Skinny Pop is up, Pirate's Booty is soaring, and Dots is now literally the #1 pretzel brand in the country. But hey, don't forget the classics. Reese's and the original Hershey's bar are still growing strong, and a lot of that is thanks to absolute genius ideas like the Reese's Oreo mashup. That thing was the single biggest new candy launch this quarter.
And this right here perfectly sums up their whole strategy. The CEO himself said it, new products like the Reese's Oreo aren't just selling a ton, they're hitting the mark with Gen Z and millennial customers. And for a brand that's been around forever, that is absolutely critical. Okay, so we've seen the amazing sales, now it's time to solve the mystery of the disappearing profits. Look, if people are buying more, then demand isn't the problem. The real culprit has to be hiding on the cost side of the books. And here it is, the #1 reason. Cocoa prices, the absolute lifeblood of their business, have skyrocketed by more than 70% compared to last year. That's not just a little bump, it's a massive, almost unprecedented shock to their most important ingredient.
But you know what? It's not just cocoa. Hershey is basically caught in a perfect storm of rising costs. On top of the cocoa, they got hit with an extra $65 million in tariff expenses. And then there's this thing called unfavorable mix, which is a fancy way of saying that even though we're buying more, we're choosing the products that are actually less profitable for them to make. Ouch.
And you can see the direct impact of that perfect storm right here in their gross margin. Just look at this table. Last year, for every dollar of chocolate they sold, they got to keep about 40 cents. This year, that's dropped to under 32 cents. That is a huge bite out of their profit on every single thing they sell.
So with all these costs piling up, what's Hershey's plan? Well, they're not just sitting around hoping things get better. They have a really clear 3-part plan to fight back.
So their game plan has 3 main parts. First, strategic pricing. Yep, you've probably seen this yourself at the grocery store. They're raising prices to help cover those crazy ingredient costs. Second, they're tightening their belts inside the company, looking for every penny they can save. And third, and this is important, they're not backing off what's working. They are continuing to invest in marketing and the cool new products that keep us all coming back.
Okay, so you take the strong sales, you add in the high costs, and you factor in their new strategy, and with all that in mind, the company has updated its forecast for the rest of the year. When it comes to sales, the good news just keeps rolling in. They're feeling so good about their momentum that they've actually raised their sales forecast for the whole year. They're now expecting about 3% growth.
But when you look at profits, well, that's where the story of those high costs really hits home. They've managed to improve the outlook just a tiny bit, but they're still predicting that profits will be down by a staggering 36 to 37% for the entire year.
So what's the big takeaway from all of this? Well, Hershey's leadership is definitely projecting confidence. They believe they have the right brands, the right strategy to get through this and get back to growing both sales and profits in 2026. But they're also being real about it. Getting those profit margins back to where they were is going to be a marathon, not a sprint.
And that really leaves us with the big final question for Hershey's future. There's no doubt they are successfully selling more snacks and candy than ever before. But with the costs of cocoa still sky high, is their playbook of raising prices, cutting costs, and creating cool new products going to be enough to sweeten that bottom line? You know, only time will tell.